another issue, and typically when you're dealing with one, it's like Murphy's Law and more things pile up. And now suddenly we're dealing with a slowdown in earnings. This is the first time we're talking about single-digit sort of earnings growth. And now there's a big issue about consumer, whether there's a bigger consumer slowdown in the making. Raamdeo ji, where do you stand on the way earnings are and whether this is just a temporary blip or whether this is something that's concerning you?
It has to be a temporary blip because we cannot go from 4 trillion to 8-10 trillion without consuming more soaps, more milk, more everything. I mean, consumption has to take place. 60-65% of the economy is about consumption. We'll need more car, more motorcycle, more bicycle, everything will need more. Just that this is an adjustment phase, post-COVID, all the rich guys, they are buying. So it's a K-shaped recovery. And I hope that it trickles down and private capex picks up. There are a lot of hopes. But right now, consumption is not looking to be very exciting.
Navneet, comment on this. Again, this was one of the things that market will always give you what you don't expect, right? Which is why the market's the best teacher. So the FPI selling was one aspect. And now suddenly there's talk of urban consumption slowdown. Your thoughts on what you're seeing and hearing from companies?
No, so there's surely a moderation in growth in the urban India from the base that we had earlier. You look at footwear, apparels, QSR, passenger vehicles, across the board. You can really feel it, and I'm sure companies are telling you that, companies are telling us that. There seems to be some bit of uptick or at least early signs of uptick in the rural growth. Over the last couple of years, everybody has been talking about a K-shaped recovery. The premium products doing well, but the rural consumption is not doing well. I think we are seeing some bit of reversal. Maybe the terms of trade are shifting with higher food prices, which is like hurting, let's say, an urban consumer, but probably benefiting a rural consumer who's more dependent on agri income, better monsoon, and maybe welfare spending. We can discuss the separate aspect of that in the long run, what it can do to macro stability, but maybe the higher welfare spending by the state governments, last 14 or 15 governments in last 6 months have announced some or the other scheme, that money probably is helping the rural consumption. So that's a brighter aspect, but yeah, I mean, we are all concerned about the slowdown in consumption. 2/3 of our economy is consumption, and if you have these numbers of single-digit growth, that's definitely concerning.
That's consumption, that's one part of it. But Raamdeo ji, on earnings overall, I mean, I remember in our earlier conversations earlier this year, you've been talking about reasonable expectation to have like 12 to 15% earnings compounding. Are we still on track with that trajectory?
No, that is the main pain point. Like at the beginning of the year, my head of research told me, Raamdeo, we have done 1,000 this year and 1150 next year. For sure, it can only go up, it cannot go down. First quarter result, he comes down to 1100. Now this quarter result is not even out. He's already at 1070. I said, where will you go up? Are you going to back to 1000? Yeah. So, the pace of decline in the earnings is quite alarming. And their estimate for this quarter is just about 6-7%. Even if you see the business standard aggregates, it's just about 6-7%. And so we are not seeing too many bright spots in the earnings side. And markets are at all-time high. So, these are two. See, market is also dull, dead, 12, 13, 14, 15p. That matches, Yeah. But right now, market expectations are running at more like 15 to 20% kind of earnings growth. And here is a market which is kind of, and supply is building up, massive supply is building up. And other side, the earnings are disappointing. So this is concerning.
But does the consumer need help? There is only two ways, monetary or fiscal. Do we need to start to think about that?
He's the guy to tell.
But RBI has mentioned, I think the governor has mentioned that we don't have the scope for rate cut in the near future. They want to build the credibility of anchoring the inflation expectations around 4%, which in the long arc of thing is a good thing. Think about the way risk premiums can come down. Sure. If you are able to build that credibility that your policymakers will ensure inflation in India stays around 4%. This is what US did in 80s and benefited for 4 long decades of ensuring a non-inflationary continued expansion, a nice era, I think which India will also have. From the fiscal perspective, as I said, that state governments are spending more on the welfare side, but I think we need to have a right balance. They also need to do the capex. So the last 3 or 4 years or 5 years, the central government has done the heavy lifting, expecting that private sector will come in and state governments will also step up on their spending on the capex side. That hasn't really happened to the extent that was expected, and I think that will be one of the main trigger for the growth recovery, because once you have that investment cycle kick in, then you create the jobs, then people have more incomes which they consume as well as save, and then it gets converted into investments, so you get into a virtuous cycle. Just buying, throwing more money into people's pocket to get growth for 1 or 2 quarters won't structurally help us.
You know, one more aspect on the local issues, and then we'll get to global. What's happening with BFSI? And you know, for the longest time, that's been the sector that people are waiting to sort of see take off. But what we're realizing is that because the RBI is as prudent as it is, we're seeing issues right now, whether it's slamming the brakes on unsecured lending, and or whether it's gold financing, and that's showing up in the earnings of those entities as well. So, sir, where do you stand on what we're seeing, these asset quality concern, rise in slippages, RBI action? What are your thoughts when you're looking at financials now?
Financials, at least on lending side, is pretty tough. I mean, regulator is coming heavily on them to control the rate of growth of, then they're saying your credit deposit should be less than 100 or 70, 80, whatever. So clearly there is a regulator doesn't want to go wrong in terms of excessive expansion of credit or maybe unhealthy credit. They are seeing early signs of slippages. So lending side definitely looks to be kind of stuck in the sense that there is no 20-25% growth kind of scenario. And that was the sector which was leading the pack. And that is the largest part of the index also. And that's why private sector banks, if you see, they were the growth warriors, you know, like they'll grow at 25%, 22%, that kind of thing. So that has been, because liability mobilization, another controversy which slightly is dying down is about money is coming to the stock market, and hence banks are not getting enough money. So I think maybe Navneet has a better answer.
Market comes off a little bit, that problem.
People are not buying soaps because
शाम को ultimately जाके पैसे तो HDFC बैंक में जमा होना.
Absolutely. Yeah.
So I think it is
money
about more
coming
about
to
the
us
money
cannot
supply.
impact the bank deposit growth.
I think that issue has been explained and has been debated, and I think it's now been put to rest.
I hope, yeah, exactly, has been put to rest. Yeah.
But then what that also tells us is that if you're expecting growth and sort of the driving engine to be consumer, that's not the case. If you're expecting financials to do that heavy lifting, that's not going to be the case. So then what do we look out to? I mean,
so not that bad, by the way. I mean, it's let's say the expectations were very high relative to what we are delivering now. I would put it more that it's a cyclical slowdown than something very structural. All the structural story that we've been talking for last several years, the reforms that have happened, the investment we are making in infrastructure, be it physical, digital, and social infrastructure, everything else that we have done, I think that will play out the way it was envisaged. We are going through maybe a period of cyclical slowdown, but I remain optimistic on the longer
important.
end.
Now
Also,
it feels like Diwali,
one of the things that what we are discussing today, and you talked about the valuation relative to 2007 and 2021. Right. One of the things you need to keep in mind that this time what we are discussing is an earnings slowdown, but the balance sheets are in a great shape.
Absolutely.
Raamdeo, tell me, relative to any period that we have seen in any bull market,
unparalleled.
This time balance sheets of both the corporate India as well as the banking sector, financial sector, the government sector. There is a small part of, I would say, household sector which has got over leveraged, maybe some of the unsecured personal loans, etc.
That the RBI is trying to solve.
Exactly. And you have to give credit to our regulators, how conservative and how prudent they are.